Welcome back to another episode of the Yusuf Christian podcast or show. Thank you so much for joining. I appreciate you all, really. It's been a long time since I've even posted another one, but I've been trying to go a little serious with my life personally. I've been trying to do more of the walk and less of the talk, if you catch my drift, right? And it's been really important to me being practical. And I thought about making this show, this podcast for this episode in particular because of the things that I'm seeing in the media. A lot of it is the opposite of practice in a sense. Like they're saying one thing, doing another. And man, is it just like so corrupted and colluded? I mean, like they got to be in it for each other because how's it that all these politicians and these people in power act the same? It's like you got to be a natural born liar or something just to have that job. I don't know. But, anyways, I've just been really, I don't know, upset about the things I've been seeing. So I'm gonna put them into a podcast and share them with you all. Today, the things I'll be talking about today is firstly the myths about money. Yes, there are myths about money that poor people like to cling to. This is something I've been heavily, um, just exhausted of hearing. I hear it all the time because the thing about it is, if you let people speak, the first thing they want to do is shower you with their excuses. I do it too. This is why I've been trying to listen more than speak. But man, people are filled with excuses. They blame everything else but themselves for their misfortune or whatever you want to call it. Yeah, but I'll be talking about the myths about money. And secondly, I'll be talking about just some key points about the interest rates, the things that the Federal Reserve is doing. I'm not going to explain what the Federal Reserve is, but I will explain the interest rates because, I mean, it's crazy. People don't even understand the role of the Federal Reserve and how they influence the economy through the interest rate. People don't even understand what an interest rate is. It's quite sad. It's funny. Before I begin, I was just at AT&T, and I was talking with the lady who was servicing me, helping me get my phone activated, and we're just getting to know each other. She says she goes to school for economics. I asked her a question. I asked her a simple question. She's been in school for economics for a couple years now, mind you, about to get her master's. I asked her a simple question. I was like, let me ask you something. Is it economically wise or is it economically foolish to lower the interest rate? For the Federal Reserve to lower the interest rate? She could not answer the question. I was like, are you serious? This is like numero uno of one. This is like rocket science 101. You know what I'm saying? Like the price of money. You don't understand as an economist. I honestly felt bad. I could tell she was under pressure, but man, it really made me feel like she was learning nothing in that university. Whatever university that it is out here in Los Angeles, California. They can't be teaching her nothing. She's not trying because like she like even got nervous like at the fact that she couldn't answer that question. I mean, shoot, it's not that difficult to me, but I guess it is to other people. But this is why I'm making this podcast, really. Oh man, it's crazy. Like there is a difference between being book smart and street smart, but sometimes people ain't got either. Um, I'm sorry. There's energy directed at the wrong thing. Let's see here. So first off, I would like to discuss myths about money. Um, it's quite interesting. Before I get into the interest rate of the Federal Reserve, I would just like to talk really quickly about some things that I've learned from certain economists, such as Thomas Sowell, such as Peter Schiff, even going back to Keynes and Milton Friedman. It's economics is actually quite simple. It's the most simplest thing in the world. It's economic jargon that I guess you could say puffed up economics or politicians use to make economics sound difficult. And the reason why they do it because if you understood it and you understood really what's going on, you would be upset. I'm about to explain to you why that is. But first, let's understand what money is. I know this is quite simple, but we need to lay a foundation before we go into understanding why the Federal Reserve lowered the interest rate. First off, money is equivalent to wealth for an individual only because other individuals will supply real goods and services in exchange for that money. Okay? So money is this in I mean currency, let me say that in particular. Currency is essentially useless. It's worthless. But we have to pay taxes for it, and you know that you can accept that currency and go to somewhere else and exchange it for bread, eggs, or get your car fixed, things like that, right? You know that you can do it. It gives you confidence. But if that confidence ever left, all hell would break loose. Actually, everybody would run to the bank right now and we would have a collapse. This is also the reason why the FDIC was created. It was to create Stability in the banks through confidence in the bankees, right? The people who are storing their money in these bank accounts. So it's quite interesting the things that go on. But people, I mean, from that standpoint, I should say, from that standpoint of the national economy as a whole, money is not wealth. Actually, it would be better to say if you had money in silver and gold, as people know I'm fond of on this podcast, because that could be constituted as real money. But if they can control in some way, form, or fashion the currency that you have, that cannot be constituted as real wealth. Not at all. It's in fact just an artifact used to transfer wealth in quotation marks, wealth, or to give people incentives to produce that wealth, right? So really, it's just a confidence game. I know we've all heard this before. This is like actually the first thing I learned when I started studying economics. I remember I took AP US history, and he was like this guy in my high school. He was a profound economist, but he taught history. He just happened to teach history, but also included economics. And how priceless! You're explaining history, and at the same time, you're explaining how that affected the economy because they're intertwined. But he'll explain the economy to me at the same time, and I just realized I'm sorry, I didn't realize the first thing he taught us was that, money is not wealth. That's actually the first thing he taught us. You want to understand what is really going on. You're exchanging confidence. You're exchanging ownership essentially, right? So income versus wealth. This is also what we also need to understand. No matter how much income passes through your hands in a given year, your wealth depends on how much you have retained and accumulated over the years. So that's the difference between, I guess you could say, rich and wealthy, right? A rich person just has a high income in that particular time at that particular moment. He's rich, he's getting money in. But a wealthy person has old money, right? That term old money refers to money that has not been in circulation for a long time, right? Like like I'm in California, I see a lot of Asians, I see a lot of white people, I see a lot of Indians. They got old money. They got money coming in from Mumbai. You know what I'm saying? Like that's old. That's money that's been passed down from generation to generation. That's generational wealth, right? Um, yeah. So at that, with that notion, I've never been wealthy. I mean, I've had savings here and there, but I mean, if I stopped working, my wealth would last me about a year. That's it. That's nothing. So therefore I don't think I'm wealthy at all. But I can say that I'm above the average American who does not even have $500 saved up for an emergency expense, which is quite ridiculous. But I mean, shoot, who would want to live like that? I always ask myself that, like, man, the majority of people are struggling, but man, it's like they choose to do it, in a sense. But I digress. Anyhow, yeah, we went over income versus wealth. I also wanted to bring up a key point about dividends. Like I just mentioned, right, like I'm not a wealthy man. I can't say that I'm a wealthy man because like what savings do I have? I don't have anything to last me for a lifetime, right, or a generation. Not at all. um but what's interesting, even now I can purchase stock in a company, and regardless of how well that company does, I'm entitled to a dividend. They can change that any time, but most companies do not do that. They will pay a dividend. They call them dividend kings. There's dividend kings, people who have companies, corporations, major corporations who have been paying dividends for the longest time since they're open essentially. It's quite amazing. But I mean, dividends is like my new bread and butter. I mean, you need to be paid in some way, form, or fashion. And unfortunately, most of the middle class, they use the stock market. So I mean, shoot, dividends from corporations. Why not? Sure, it's crazy as I buy all these products from what's a good example? Just I don't buy a lot of products from Johnson and Johnson, but I know they have a dividend. They pay out a dividend. But if I buy all these products from Johnson and Johnson, how about I invest some of that money back into the economy and get reimbursed for it? You know what I'm saying? Like it's a deal, right? It's a bargain on my money. You know what's also interesting though, and this just came to my mind. You should not be investing if you are in debt. And the reason for that is because of how high the interest rate, which I preluded into this topic for, how high the interest rate is concerning that debt. The stock market can only give you what, 11% per year, maybe they say, but you got credit card debt that's at how high? 30% rate of interest. No, you need to pay off your debt first because you're 20%, you're in a 20% deficit essentially. hypothetically speaking, if you were to invest in the stock market. But ideally, you should pay off your debt. I've even heard people, very famous business owners, say that why are people borrowing money to open a business? You know, like you don't know if that business will rise or fall, if it will fail, if it will succeed. You don't know anything, but you're willing to get into debt for something like that. It's unnecessary. Yeah, and I have every confidence in speaking this because I've willingly got into debt for numerous reasons. And man, it's not fun getting out. I'm gonna be honest with you. You are literally a slave. You are literally a slave. And who wants to live like that, man? Not I. Not I. As I digress, let's talk about the Fed now and their interest rate. They recently dropped it down to a quarter of a percentage point. I know you all are aware of this. This was what's interesting is it's not really surprising that they did this. It's shocking to me in a sense because I'm like the last thing we need is a lower interest rate right now, and I'll explain why later. But it just blows my mind that they lowered this percentage point. Because the interest rates are the cost of borrowing money. The Federal Reserve controls the money supply in the national economy by adjusting the interest rate. And the interest rate is the rate that banks will lend to each other. So, for example, if they began, so they just started their QE program again. Despite all these signs of unemployment and inflation, they decided to pump more money into the economy, therefore creating more inflation. Yeah. QE, quantitative easing, it's just fancy term for printing money and injecting it into the economy. They print money and they just increase the money supply. With more money in circulation, there's more business being done essentially. But QT, which is quantitative tightening, is just raising the interest rate so that it becomes more attractive to save, for savers, right? Unfortunately, more people's money in the bank can mean less circulation of that money for a short time until it can be lent out again. And less money in circulation means less money for consumers, right? Which means less profits for businesses, and then ultimately higher unemployment, right? It ultimately happens because that money is no longer available. Easy money is no longer available. I remember when the interest rate was low during COVID, they gave me loans for my business that I should not have gotten. I went to the bank walking out like, did they really just give me this much money? Are they dumb? But no, it was because of the interest. They don't care. It's the interest rates. It's the interest rate. And then guess what we had right after COVID? We had all this inflation and higher unemployment. Of course, they should never gave out all that money. I'm sorry. I'm sorry, but we're talking about the Federal Reserve dropping the interest rate, and it does have some good short-term effects, right? But short-term effects. What about the long-term effects? We're going to see higher unemployment, and higher inflation. I'm talking double-digit inflation. This is inevitably going to happen. We've sent all this money to Ukraine to fight this war. Really, where do these dollars go? For the past couple of decades, we've been sending money to China. They've been purchasing our bonds, to create some type of wealth investment, right? And we've been getting their stuff, their crappy, cheap stuff. Like this is not gonna last. I don't know. I must be the only one who sees this, but it doesn't seem to me like this is a system that can continue on indefinitely. Not indefinitely, of course not. And we know every 40 years, like there has been a change in the monetary system throughout history. Every 40 years, essentially, you can look back. It's been like every 40 years. There's been a major change in the monetary system. So if well, by that regard, we are past due. We are overdue in a change. I'm at 13 minutes. I want to keep this podcast around 15 minutes. I don't think I'm gonna be able to get through all this in 1 minute, but let me just continue to my next point. Um, Ultimately, the Federal Reserve, though they're supposed to be independent from politics and they're supposed to use they claim to be data dependent. If they truly were not influenced by politicians or politics, if they truly were data dependent, they would not have lowered the interest rate. Everything is pointing to a collapse in the economy. The stock market is at an all-time high. Unemployment, inflation that I continue to mention, they're rising, not falling. So clearly the program that they were doing right now is not sustainable. It's not working. But I digress. The Trump administration is attacking the Fed, mainly Jerome Powell in particular, for not starting the QE sooner. But you can see clearly the Trump administration is attacking the Federal Reserve in many different ways, trying to apply pressure to get them to lower these interest rates. Um, which I'm sure wasn't the plan at all. I mean, it's funny. Another reason why the Federal Reserve is not, I'm sorry, is influenced by politics, because if you look at every time there's an election, they lower the interest rate to make the economy better slightly. That's another proof that that's quantitative easing. Just look at what the Federal Reserve does right before an election. Yeah, I mean, just wake up. Just open your eyes. You can also see that in the stock market. Every time there's a quantitative easing program, stock market goes up. They take that extra cash, put it in the stock market. But that's just going to create an even bigger crash. It will ultimately happen. That's actually, if I can just mention something really quick, that's what the Great Depression was. The Great Depression was caused by the Federal Reserve, who lent out all this money. They just started a quantitative easing program, and then all of a sudden raised the interest rate. I mean, extremely high. So people had to call back in, the banks had to call back in the loans. People had to go pay off the debt, sell everything they had, and they still. What's funny, the Federal Reserve is the reason why the Great Depression lasted as long as it did. They kept the interest rates down. I'm sorry, they kept the interest rates high when they should have lowered them in that moment to help the economy. This is all dictated by a private bank, mind you. This is a private bank, a private institution that claims to be federal on our behalf. It's quite ridiculous. Yeah, unfortunately, the Federal Reserve, they have power over how much you pay in your interest, in your car note, your mortgage. That's complete control. They control these things just through an interest rate. Ain't that amazing? Because that's pretty much the price of a dollar. How much a dollar costs, essentially, right? Anyways, they gave into political pressure. That's why they started the QE sooner. But no signs in the national economy that we should be doing QE. The interest rates and the debts are at all-time highs. Inflation reported by the CPI is purposely miscalculated. They had to change the way they measure it in the past because it was giving results that it would. I mean, they created it to keep the government in check, and then the government changes its way of gathering statistics. Isn't that funny? Yeah, it's quite crazy. I mean, it's quite sad. People are in debt right now. Interest rates are at an all-time high on that debt. No, like what people need. I mean, it's kind of sad because the Federal Reserve, they're in a bind. If they raise interest rates right now, they could crash the economy for good. But if they continue down this path, you know what they're saying? They're pretty much saying a little bit of poison is better than dying. You know what I'm saying? Like, at this point, I'd rather just die. Shoot, a little bit of poison. What's the point of being in pain? I digress, but to me, it just makes no sense. This, I guess, this preludes into my last topic, my last point that I want to make on this podcast, and that it's the fact that people are poor because they do not understand interest. Not only do they have expenses, but debt and accrued interest on that debt. Beyond that, the rate of inflation, about 11%, is easing away at their parked cash. It's actually effortless on their part to be poor. It's quite a statement, but it is true. It is effortless to be poor. And you know what? Even if you were in a secluded area with no debt, you were away from the system, you didn't have to deal with the system. You know what's crazy is you still have to consume. You still have to eat. You still need rest. You still need a place to lay your head. At the end of the day, the last thing that everybody would pay for, if they ain't got no money left, the last thing they'll pay for is a place to lay their head. And if they can't afford that, you know what they're thinking? I needed something to eat. That's just, yeah. It don't matter how poor you are. That's a daily struggle for every single person on the earth. Even more so for the homeless, right? So, we cannot think that way. Actually, we have to be very proactive, not fight against the government. We have to humble ourselves and pay our taxes and pay our even our tithes to God. We have to humble ourselves because at one point in time I tried to not be a part of the system and the system said you can't do that. And it's true, you can't. Just living here, I'm a part of the system. I contribute to the system in some way. So I bet I might as well make the most of it. Let's be practical. Let's actually take control of our finances and let's stop making excuses for the reasons why we are not doing or we are not where we are. Let's not blame not one person. Let's not complain. But let's actually write down the problem, what's hindering us, set goals to destroy the problem, and truly set out with a pure heart and mind to achieve it. I hope this podcast really encouraged you. I'll be playing it back from time to time for myself, but I really do pray and I hope that you are blessed in whatever financial struggle you are going on because man, the richest man in the world, he got more financial troubles than everybody in this world. Um, you know, it's not as bad as you think. Trust me. And you can all whatever you thinking, you can get out of it. That is a fact. Man, that is a fact. There's nothing too difficult, right? Nothing that God would give you that you cannot endure. That's for sure. So I thank you so much for joining the Joseph Krisen podcast. Thank you so much. I hope you have a blessed day and really enjoy your wealth, enjoy your health, because it's temporary. God bless you. Bye bye.